Hello, this is Alex from ONG Tax and Accounting Services. So you've spent countless hours building your online business on platforms like Amazon, Shopify, or eBay. Your sales are booming and you feel unstoppable. Then tax season rolls around and you're blindsided by a 1099-K that reports an amount far higher than what you actually received. What do you do? In today's video, we will dive deep into the complex world of 1099-K reporting, specifically addressing discrepancies between the reported amount and your actual earnings. We will explore the potential fallout from these inaccuracies, and more importantly, we will guide you through the process of resolving these issues with the IRS. Imagine you are an Amazon seller and a portion of your funds has been withheld due to a dispute. Now, the 1099-K, however, still reflects the total gross sales without accounting for those seized funds or restricted funds. How do you report this on your tax return without raising any red flags? Using real examples in this video, we are going to explore the following topics. Number one, we're going to look at the consequences of inaccurately reporting the 1099-K on your tax return. Two, we're going to look at how the IRS responds to inaccurate reporting of your 1099-K. Number three, we're going to look at the best practices to filing an accurate return, including crafting a compelling narrative to support your case in case the IRS reach out to you about any inaccurate reporting on your 1099-K. And finally, we'll also look at the potential outcomes and resolutions that we typically receive from the IRS in cases where we effectively represent clients and make sure their returns and everything is filed accurately. Now, to start off, let's throw this word of caution out there that this video is for educational purposes solely. It is not meant to be a tax advice or any legal advice. If at any point in time you need a legal or tax advice, you should always consult with a competent tax attorney, a CPA, or an enrolled agent who can be able to listen to the facts and circumstances of your situation and help you out. All right, so let's start right away, and we're looking at the hidden trap of 1099-K. How do you fight back when you're taxed on funds you did not receive? So in this video, like I said earlier, we're going to use real-world examples where a taxpayer, as you can see on this screen, the gross sales that was reported to the taxpayer was much higher than what the taxpayer received. The taxpayer subsequently filed an inaccurate return and got this notice. As you can see, the proposed amount that the IRS was trying to collect from this taxpayer was $32,325. We'll take a look at what really happened, how the taxpayer reported the inaccuracies on the 1099-K, and what the IRS did. So to introduce you to this video, we're going to discuss why your 1099-K amount may not match what you actually receive and how to address the discrepancies when reporting your taxes. To start off, we're going to use a real-world example. So as you can see from the screen here, you have a client that received a 1099-K reporting amount of $92,028. But this client on his tax return, the notice from the IRS shows that the client actually reported $29,632 because he believes that is what he received. That is the actual amount he got into his bank account, and therefore he should not have reported at $92,000. So he went ahead and reported $29,000. And as you can see from the tax return, there was a business income or loss from Schedule C that was transposed from the first page of 1040, line 12, reporting this amount. Now, the way the taxpayer prepared this return is really inaccurate. This is wrong. This is what causes CP 2000 and IRS notices to be triggered every time. If you have a 1099-K that is showing this amount, which is higher than what you received, there are mechanics that you have to use in reporting, making sure that everything that the IRS have in their system ties up with what you're reporting. So we're going to go through this real quick, but I wanted to show you how the taxpayer actually reported the amount on his tax return And this amount he reported here was inaccurate. This is not how he should have reported the income on his tax return. So before we look at the tax return itself and other problems that arises from such inaccuracies, let's take a look at some of the backgrounds behind why your 1099K that you've received could cause a mismatch in terms of the amount of money that you actually received in your own bank account or the business bank account. Now, the 1099K reports your total gross sales. It does not account for the various charges that the payment processor or the merchant charges you. For example, if you sell during the year, you sell $10,000 worth of items, that is what the merchant or the payment processor is going to report as your gross sales. Even though the merchant may have transferred you $9,000 or $8,000, so you got lower than it's reported on the 1099K. So there's a mismatch, but the merchant or the payment processor always reports the gross sales. So that's something that you need to be careful about. The gross sales are reported without accounting for the various charges, as I have stated. The mismatch could also happen when, for example, you made a sale in late December, but then the amount, the merchant or the payment processor did not deposit the money into your business bank account or into your personal account until the following year. Okay, so let's say you made a sale somewhere in December 28, 2023, but then the amount does not hit your bank account until January 2nd, 2024. There's going to be a mismatch between what the 1099K says versus what you actually received. So those are some of the mismatches that you need to be aware of. One of the major issues that causes 1099K mismatch, and when we talk about mismatch, we're talking about on the 1099K, you have a different amount. And then when we go into what you actually received in your bank account, there is a different amount. And usually what you receive in your bank account may be lower than what is reported on the 1099K. And one of the biggest reasons is when the payment processor or the merchant seizes, restrict, withhold, or confiscate your funds. And that could be as a result of so many factors that we're going to talk about. Okay, so a lot of the time, people that are selling on Amazon, eBay, and people that are using payment processors like Stripe and Amazon Pay could have their funds seized, restricted, or withheld because of something that platform views as deceptive or fraud or something like that. So when this happens, it causes differences in the reported amount on the 1099K versus what you have actually received. Now, because the focus of this video is based on cases where accounts are restricted with payment processors and you end up not receiving all of your funds, we're going to focus more on why accounts are usually restricted with these payment processors or merchants. Now, payment processors like Amazon, PayPal, Stripe, etc. may restrict your account due to suspicious activity, or maybe you're violating their terms of condition or engaging in deceptive practices. That could cause your account to be restricted. And this restriction often results in your inability to withdraw or send money from that account. When funds are withheld, those funds that are withheld are typically also included in the 1099K. Okay, so quick example. Let's say during the tax year 2023, you had a gross sales of 100,000. During the course of the year, 20,000 was paid to you, and then the remaining 80,000 continued to stay in the merchant account. Somewhere along the line, the merchant account or the payment processor detected that you have violated their terms of services or engaged in deceptive practices. So your remaining 80,000 that was staying in the account was actually frozen or seized. You're not going to get that 80,000, but when those payment processors report all your sales, gross sales on the 1099K, they would report the 100,000 that you actually got as the sales. That is what they're going to report because that's how much payment they process through your store or whatever commerce or platform you're running. So you have a case where you made 100K sales, you only received 20,000, 80,000 has been restricted. So that is how these mismatches can happen. So we're going to go through it really quick and show you how that happens. So when there's the mismatch, what do? Let's take a look at some of the steps that we need to look at when your 1099K amount is higher than what you received. In this video, we're going to help you understand the consequences of inaccurately reporting the 1099K that you have received on your tax return. You're going to learn how the IRS respond to inaccurate reporting of the 1099K and how to respond to the IRS inquiries. You're also going to know how to file an accurate return and create a narrative to support your filing. This is assuming that you've already committed the error. But if you haven't done this before and you're watching this video, at least this should give you a precursor or some kind of a helpful guidance for the future as to how you report these things on your original tax returns. But if the error has already happened, then this video is going to help you figure things out and how to resolve the issue. And then finally, we're going to see how the IRS recognizes your response and then their approach to resolving your issues. Okay, so now let's look at a real example where a taxpayer had a total of $92,038 in customer payment that was processed through Stripe in 2017. And this is a real life example. I showed you the notices from the beginning and how the taxpayer reported the amount on his tax return and notices he got. Let's start with the fact. Taxpayer had a total sales of $92,038 in 2017, but Stripe labeled the taxpayer's business as high risk, resulting in a frozen account and a 90-day freeze on all transfers. Despite the restriction, Stripe managed to transfer $29,632 to the taxpayer within 2017. So as you can see, there was a gross sales of $92,000. Even though the taxpayer account was restricted, part of it was given to him, which is $29,632. The remaining transfer that was scheduled to be transferred in 2017, which is the difference between the $29,000 he's already received and the $92,000 in sales, is $62,406. This is the amount he never received until the early 2018. So the question is, since he only received $29,632 in 2017, but his total sales was $92,000, what amount should we be reporting on his tax return? And that's where we're going to go through and show you how you need to tackle these issues. Now, like I showed you earlier, total sales reported on 1099K is $92,000, but taxpayer only reported $29,632 because this is what the taxpayer think he received. This is what he think he received, and so he reported this. So we're going to show you the notice that came from the IRS real quick. So when you make such errors, the IRS typically issues you a CP2000 notice with a proposed assessment. So I'm going to show you a CP2000 real quick. Here's a CP2000. When you make a mistake on your tax return where the IRS shows a different amount from what you reported, you get a CP2000 showing that you've underreported income. And the IRS does a good job on this CP2000. It tells you what they have on the system against your social security number. So in this case, the IRS says, okay, well, taxpayer, you got $92,000 in sales, but you only report $29,632. So there's a difference of $62,000 that you need to account for. And because you did not account for this on your original return, we have actually corrected the return. So as you can see, the taxpayer filed the return using the $29,000. The IRS said, nope, you should have reported $92,000. The IRS recalculated and showed a difference. So at the end of the day, when the recalculation was done, the taxpayer owes about $24,958, including penalties and interest. So I'm going to show you what happens after the CP2000. So we know that the taxpayer has received the CP2000. Now, what's next after the CP2000? The CP2000 tells you what to do if you agree with the proposed assessment. If you do not agree, it also tells you what to do. But in this case, in this real life situation or the example that we're using, taxpayer failed to respond to the CP2000. And so that led to the IRS issuing another notice, which is usually the 90-day notice, which invokes the tax court jurisdiction. So the CP3219A is the next one that most of the time the taxpayer gets when they do not respond to the CP2000. It's called a notice of deficiency. So we're going to show you that too real quick. Alrighty, so this is how a notice of deficiency looks like. When the CP2000 is sent to you and you do not respond, you get this notice of deficiency, and the IRS tells you if you disagree, you must file a tax court petition within a specific period. So they give you the time, the deadline for everything. So in this case, you have an issue where the increase in taxes is $24,958. There's also a substantial understatement penalty. If you understate your original income, the IRS also slaps you with an understatement penalty. And, the understatement penalty, I can explain it, but that's not the focus of this video. The focus is to show you how to accurately report 1099K return when your 1099K is higher than the amount you receive. So that's what we're dealing with here. In this case, taxpayer did not respond to CP2000 and he got CP3219A. At this point, the situation is getting worse. What I would say to taxpayers is the IRS is a very reasonable institution to deal with. If the IRS sends you a notice, first of all, they tell you why you're receiving the notice. They will also tell you within the notice what you need to do if you agree or if you disagree. They also give you a deadline to respond. So it's important that when dealing with the IRS, you read all the notices and respond to them accurately and appropriately. All right, so you've seen how the CP2000 looks like. You've seen how the notice of deficiency looks like. Let's move on to the next phase of our presentation. When the taxpayer got this and explained their facts to me, I understood it, and I know that the law is on the taxpayer's side. So what did we do to solve the issue? It's pretty simple. So here we're going to talk to you about how we responded by filing an accurate return and supporting our narratives. So in this case, my point of approach was to file the correct return. So in this case, we filed an amended return and then also attached a narrative indicating why the taxpayer should not be paying taxes on the amount they did not receive. Okay, so we start by referencing specific Internal Revenue Code to build our argument. And then we apply the same laws or the code to the taxpayer situation by providing proper analysis and explanation. So we're going to go through some of this analysis and explanation very soon. Now, we'll come to how the tax return was prepared accurately, but for now, let's deal with some of the substantive Internal Revenue Code that addresses some of these issues. So first of all, let's take a look at how taxable income is determined under the code. Taxable income includes all income that you, as a taxpayer, actually or constructively receive during the tax year, regardless of the source. So the two words here that you need to be concerned about is actual receipt or constructive receipt. Let's look at constructive receipt, and you can see all the Internal Revenue Codes that I have cited in here. Let's look at constructive receipt and substantial limitations. Now, if a taxpayer's control over an income receipt is significantly limited or restricted, the income is not constructively received and need not be reported as gross income for that tax year. So what is the difference between actual and constructive receipt? Actual receipt is basically you sell something, you get your money right away. That's you've actually received it. Constructive receipt can take so many forms. For example, you sell something, but then you direct the payment to be sent to some account that you control, or you've received a check physically, but you decide not to cash the check. You have constructively received the income. But there's so many examples we can give you in constructive receipt. But when we talk about constructive receipt, control over the income is very important. Obviously, if your income or if that money that you received is restricted such that you cannot even have access to that income, then that income has not been constructively received. In this case, the taxpayer's account with Stripe was limited. It was restricted to the extent that he could not get access to the account. He could not take the money out. So all of that $62,000 that was remaining in the account never ever reached the taxpayer until the following year. So in 2017, in this example, the taxpayer only received $29,000 and not $92,000 or whatever was reported on the 1099K. Another Internal Revenue Code that you also need to be aware is the last one you're seeing on your screen, which is in terms of cash basis, taxpayer, and constructive receipt. It basically says that income is considered constructively received by the cash basis taxpayer when it is available to that person without any substantial restriction. Again, applying the fact of these taxpayers to this law means that this taxpayer is cash basis and most taxpayers are cash basis. Most individual taxpayers are cash basis. In this case, the funds that was seized or restricted by PayPal or Stripe was not available to that taxpayer. The taxpayer really had some substantial restriction in terms of getting the money. So it cannot be said that the taxpayer constructively received that income. So even though 1099K says 92,000, but taxpayer received 29,000. On the tax return, the taxpayer, not being a tax person, is technically correct in reporting how he did it, but substantively, how we report this things so that it doesn't trigger notices is not how the taxpayer reported it. Okay, so we'll show you how the taxpayer should have reported some of this income that's restricted. So to begin with how the tax return was prepared, let's take a look at the taxpayer's original return. So taxpayer actually completed this form, Schedule C. So on the Schedule C, it looks like he completed Schedule C easy, and then he didn't have any expenses. So the only thing he had to report was the amount he actually received, which is $29,632. And this is a wrong way to do it. And that's why he got the notices saying that he owed more in taxes. So we're going to show you how the tax return should have been prepared. Alrighty, so first of all, this is how the tax return should have been prepared. On the Schedule C, the taxpayer should have reported the total gross amount that was showing on the 1099K, which is the 92,000, because this is a language the IRS understand. They want everything that you're reporting to match with what they have in their system. So in this case, taxpayer should have reported the amount as shown on the 1099K. And then on the expenses side, you go to other expenses, line 27A on Schedule C, you put the rest of the money that you did not receive. The rest of the money that was not received goes on line 27A as other expenses. But of course, you have to explain what kind of other expenses you're claiming. So let's scroll down to figure out what other expenses is. As you can see from here in the other expenses box, we put it amount here. We put it 62,396 as amount that's withheld by Stripe. If you're filing an amended return, of course, you have to determine what the original return was and then the correct return amount is, and you determine the differences, but that's outside of the scope of this. How to prepare amended return is out of the scope of this video, but it's just to show you how the differences all ties together. Once that was done, we also explained that taxpayer did not constructively receive the amount that's reported on the CP 2000. And then we also, because we provided more details than what's here, this box here cannot contain almost all of the stuff that we need. So we directed the IRS to look at the additional attachment of the statement of fact and our protest or argument that's also attached. So we attached something to this amended return to explain our position, because you cannot just state that taxpayer did not constructively receive the amount and get away with it. You have to explain the basis as to why you think the taxpayer did not constructively receive. You must also support your argument with the IRS, the Internal Revenue Code, or any court cases that you have. You must support your argument with it. Once you support your argument with it, you also have to weave your facts and circumstances so that it aligns with the law. So that's where your analysis and conclusion comes into play. If you don't know how to do some of these things, this is your time to hire a CPO or an attorney to help you out, because these things can get very technical, and if you don't know what you're doing, you maybe end up wasting your time, and you could even end up with the IRS digging more into your tax return than it's necessary. So if you don't know how to do this stuff, make sure you get help. Hire a tax attorney, a CPO, and a road agent to help you out. We've shown you how to properly report this amount so it ties up with what you actually received. And as you can see, when we reported a gross amount, we back out the amount that's withheld. We got 29,632, which is basically the 29,632 is what the taxpayer reported on the original return, but the means, the method in which he reported it was not accurate. He should have started with this amount, not just start with this amount or the type of form that he filed. And so I hope you understand as you look into the differences between what the taxpayer did versus how we corrected it. Let's go back and look at the results that was achieved by going through this process. Now, before I show you the report, remember that when you're dealing with the IRS and you're protesting, first you need to know the internal revenue codes that you're relying on. You need to know your fact and your circumstances, and then make sure you combine the law to your fact and circumstances, provide a clear analysis and conclusion of your issue. And if the law is on your side, the IRS is going to work with you and make sure that they reverse the taxes that you owe. So let's look at how the IRS responded. In our situation here, the taxpayer did really experience a favorable outcome because their situation really aligned with the law. As a result, the issue was resolved and the taxpayer received a refund for that year. Now, the reason why they received a refund was back in 2019, they had filed a tax return. And 2019, they never received a refund because part of that the refund was used to fulfill some of these taxes that was owed in 2017. And so when everything was reversed, that refund that they initially took out was given back to the taxpayer. So the point I'm trying to make is, let's say you owe taxes in 2017, you did not pay. In 2018 or 19, if you file your return and you're due a refund, the IRS is going to make sure that you don't get the refund because that refund is going to be used to cover the taxes you already owe. So if you're asking yourself question, okay, why didn't the IRS reduce this balance to zero? Why is there a refund? It's because the IRS had initially taken the taxpayer's refund to settle some of this debt. But when they realized that the taxpayer actually did not even owe any of these funds, they reversed all the taxes and then gave those refund back to him. So that's why you're seeing 738 as a refund. So I hope this video helps you out. If you fall into a situation where you have your 1099K amount as higher, reporting higher amounts than what you actually received, you need some professional help. Don't just rely on this video and think that this video could be the same as your situation. Always make sure that you have talked to a professional to analyze your situation to make sure that it aligns with some of the things we've talked about in this video. You always need to seek a competent tax advice before you proceed. So if you're thinking of using this video, please proceed with caution because your situation or factor circumstances may not be the same as this taxpayer situation. But I hope this gives you a general view of how you need to report your 1099K issues and how to resolve issues when they come up. My name is Alex, and I hope to see you on the next video. If you like this video, please share, like, subscribe, and I'll come to you some other time with a new video. Thank you, and bye for now.